Okay, so the title of this video is Trump's Greenland Tariffs: How Trade Wars Could Crash Your Stock Portfolio in 2026. Let's break that down real simple. Imagine you're a kid with a piggy bank full of allowance money. You've saved up, say, $20 from chores. Now, you want to buy a toy that costs $15, but suddenly your big brother says, hey, if you want that toy from the store across the street, I'm charging you an extra $2 just because. That extra fee, it's like a tariff. It makes everything cost more, so maybe you buy less or skip it altogether. And if the store fights back and charges extra on stuff your brother wants, now nobody's happy and both sides end up with less stuff. That's what this is about. Trump, just a couple days ago, on January 17, 2026, announced he's slapping 10% tariffs starting February 1 on goods from 8 European countries: Denmark, Sweden, France, Germany, the Netherlands, Finland, the UK, and Norway. Why? Because they're standing in the way of the US buying Greenland. Yeah, that big icy island owned by Denmark. He says it'll jump to 25% by June if no deal happens. Europe's already talking retaliation, like their own tariffs on US stuff. This could spark a full trade war where prices rise, companies make less money, and your stocks, those little pieces of companies in your portfolio, could drop hard. It's not about crashing the whole world, but it could shake up what you've saved, like that piggy bank feeling lighter after all the fees. My name is Praku, and I spend way too much time thinking about why money feels confusing even when people try to do the right thing. Look, here's a common money belief that bugs me a little. Investing in stocks is always safe in the long run because the market always goes up. Adults say it like it's gospel, but it doesn't work that way, not really. Sure, over decades, yeah, markets trend up, but trade wars? They create these short-term storms that can wipe out years of gains if you're not careful. It's like saying a boat always floats. True, but not if there's a hole from hitting rocks you didn't see coming. The belief ignores how real-world mess-ups like politics and tariffs punch holes in your plans. It's frustrating because it makes folks think they can just ignore the news and be fine. Nah, you gotta watch for those rocks. Okay, let's get into some numbers that might surprise you. These come from places like the OECD and World Bank, but I'll keep it every day. First, back in the last big trade war, the US-China one in 2018-2019, the OECD says it shaved off about 0.5% from global growth. Translate that, it's like your weekly allowance getting cut by $1. Doesn't sound huge, but over a year, you miss out on toys or snacks you could have had. Second, the World Bank looked at how tariffs hit stock markets. In that same mess, US companies lost around $1.7 trillion in market value. That's not pocket change. It's like everyone in a town losing their savings overnight because stuff got pricier to make or sell. Third, behavioral economics folks at places like the OECD point out that trade uncertainty makes investors pull back. One stat, during trade spots, stock volatility jumps 20 to 30%. Everyday meaning, your portfolio swings wilder than a kid on too much sugar. Up one day, down the next, wearing you out. Now, let's do a concrete math example. We'll use small numbers, step by step, like homework you actually get. Say you own stock in a US company that makes phones. They import screens from Europe for $100 each. Profit per phone? After costs, maybe $20. So sell 1,000 phones, that's $20,000 profit. Bam, stock looks good. But slap on a 10% tariff, now screens cost $110. Profit drops to $10 per phone. For 1,000, just $10,000. Company reports lower earnings, investors freak, stock price falls, say from $50 to $45 a share. If you have 100 shares, your value drops from $5,000 to $4,500. That's $500 gone. And if Europe hits back with their own 25% on US parts, costs go up more, profits shrink further, stock could dip to $40. See, it's simple addition and subtraction, but it adds up to real losses in your account. Here's the confusing part. Money isn't just numbers, it's feelings too. First, fear kicks in during trade wars. Think of a story. A guy I know sold all his stocks in 2018 when tariffs hit headlines. He was scared of losing everything, like watching a storm roll in and boarding up windows too early. Lost out on the rebound. That's loss aversion from behavioral economics. We hate losing twice as much as we love winning. Second, comparison messes us up. You see your neighbor's portfolio tanking less because they avoided Europe-exposed stocks, and suddenly you're jealous, switching yours around at the wrong time. It's like kids comparing candy hauls. Ends up with trades that leave everyone short. Third, habits bite. Folks get used to checking balances daily during volatility, panicking over small dips. Story time. A friend refreshed her app every hour in 2019. Sold low, bought high later, broke her own rule of patience. Emotions turned smart plans dumb. You might be thinking, this sounds too simple. Aren't trade wars just bluster that blows over? Fair point. Sometimes they do fizzle, like parts of the China stuff. But in 2026, with Europe prepping countermeasures and summits lined up, it's real. Or, that's too doom and gloom. My stocks are diversified. Maybe, but check. If you're heavy in tech or cars, those rely on global parts. Tariffs hit chains hard. One clear analogy. Picture your money like jars on a shelf. One jar is US stocks, another Europe, another bonds or cash. A trade war is like an earthquake shaking the shelf. The US and Europe jars wobble most, maybe crack and spill. But if you've spread stuff into safer jars like gold or boring utilities, they stay put. It's not about avoiding shakes, it's having jars that don't all tip together. So, gentle action steps. No rush, no perfection needed. First, log into your account. Look at what you own. See any big exposure to Europe or imports? Maybe trim a bit, not all. Second, add a little diversity. Think index funds with global mix or some bonds, like putting eggs in more baskets. Third, set a reminder. Don't check daily, weekly's enough. If dips hop in, have cash ready to buy low, but only what you can afford to sit on. It's okay if you do nothing today. Start small tomorrow. Look, money's a tool, not a scorecard for how smart you are. These tariffs, they're frustrating, but you can stay calm. Focus on control. What you save, what you spend, what you learn. It brings peace, like knowing your piggy bank's safe even if the neighborhood squabbles. You've got this. It'll make sense over time. Thanks for watching. Hit like if it helped, and I'll see you next one.